Hey traders, we are starting a new 30-day trading challenge in our Facebook group tomorrow, July 9th. For this challenge, we're only going to be allowing credit spreads. If you participated in the first challenge, we allowed any strategy, but this time we wanted to try to make it strategy specific so people who aren't used to trading credit spreads could get some practice learning a new strategy. So I want to make a quick video showing how you would execute a credit spread in thinkorswim. If you're not a member of our Facebook group, I will post the link in the video. Before I get into how to enter the order, I need to reset my balance from the last challenge. For this challenge, we're going to set it to be 10,000 as opposed to 5,000 in the first challenge. The first thing you'll notice that my account shows all accounts. I need to change this to say margin, because there's two accounts, margin and IRA. So when I change it to margin, you'll see that I have a balance of 4,827. That was how my balance ended in the last challenge. And to reset it, I'm just going to quickly go and enter a trade. It doesn't matter what kind of trade you enter. I'm just going to go in and let's say I'm going to buy a call on Micron. I'm going to hit confirm and send. Okay, it's not letting me do that. Let me do it for a smaller contract size. I didn't have enough buying power. So I hit confirm and send. Okay, so that order submitted. If I go to the monitor tab, I can see that the order is working. And under positions, I need to right click on the position and see where it says reset all positions. That's the first step I want to do, to reset the account back to the original amount. So when I hit reset all positions, yes, it cancels the order, and you can see it puts my account back to 100,000. So it's just easier to make the adjustment when you set it back to 100,000 to begin with. So I need to go through the same step again. Trade. Gonna buy one contract or sell one contract. Need to change it to buy. Confirm and send. So now I want to adjust cash, and I want to reduce it by 90,000. So if I type in minus 90,000, then click off of it, hit OK, you can see now my account has dropped to 10,000. Now I need to cancel the order I just put in. So if I go up to the working order and right click, hit cancel order, now my account is at 10,000. Option buying power shows 10,000 and my net lick shows 10,000. So that's what you need to have for the beginning of this trading challenge. So going back to how to enter a credit spread, if you're not familiar with trading credit spreads, I'll post another link to a video I made going into more detail. Just at a high level, think of credit spreads as looking at where you think the stock will not go. You know, most of us, when we are buying a call or buying a put, we have a certain expectation that the stock is going to move up or move down to a certain level for us to profit off the movement of that call or put. With a credit spread, you're trying to think about, you know, where you think the stock may not go. So in the case of being bullish, if you're bullish on a stock, you think the stock may go up, but you're not sure how much it could go up, or you're maybe not sure the timing of when it could go up. You know, it may go up, but it may take it 2 months to go up when you only bought an option for 1 week. Well, then obviously you're going to lose on that option. So another way to approach a bullish strategy is you could sell a put credit spread so that you profit off of the stock not dropping to that certain level. If the stock stays the same or goes up, you would make a profit. You only can lose if the stock drops. So an example of that would be, let's take Micron Technologies. If I think that, if I'm bullish on Micron Technologies and I think they could go up, if I wanted to sell a credit spread on them, I would pick a price below the current market price of where I think Micron will not drop to. So in this case, if I think 52 is a good support level for Micron, that may be where I start looking at selling my credit spread. So again, you have to think of the opposite. If normally when we think of bullish, we think of buying a call, but when you go to sell something, which is what a credit spread is, we're opening the trade by selling something initially. You actually want to do the opposite, and in this case, meaning sell a put. Because normally we think of a put as doing something when you're bearish, but that's buying a put. If you sell a put or sell a put credit spread, that's actually a bullish strategy as well. So we want to look at putting on a put credit spread at a level we think that Micron will not drop to. You could also do the opposite. If you felt like, I don't think Micron is going to go up to, say, 56, then you could sell a call credit spread and you would profit off Micron staying below that price. And that would be a bearish strategy. That would be a strategy where you would be expecting Micron to go down, because again, you profit off the opposite happening of what you would normally think of when you get into a call or put. If I sell this put spread, I'm going to profit if Micron doesn't move at all, and I'm going to profit if Micron shoots up. So again, that would be a bullish strategy. I only lose if Micron drops down below my strike price of 52 if that's the one I'm going to choose. So when we go to look at how to put that trade on, I have up an option chain for Micron. Another thing I look at too is I look at the probability of out of the money. Normally when I'm going to sell a spread, a credit spread, I like to be around the 70 to 80% probability of out of the money. So 52 may be a little too risky, even though if I feel like that there's a strong support level at 52, I would go ahead and do that. But if I want to give myself even more cushion, I would probably go with, say, the 51.50. And this would be the first leg of my credit spread. A credit spread is made up of two legs. You have a short leg and a long leg. With credit spread, your short leg is going to be the leg closest to the stock. So if I'm going to pick the 51.50 strike, that's going to be my first leg. That's the leg I'm going to be selling. So there's two ways you can do this. You can right click on that leg and go to sell, and you want to select vertical because a credit spread is a vertical spread. And when you do that, it will automatically pick two strike prices. It's going to pick the strike price that you right clicked on, in this case the 51.50, and then it's going to pick the very next strike price below it. But you don't have to necessarily use that same strike price. I personally don't like doing 50-cent wide spreads. I would probably adjust this strike price to, let's say, 50.50, or I even may go down to 49.50. And if I do one contract, so this is a 2-point wide spread, I'm going to receive a 31-cent credit. If I hit confirm and send, you can see after commissions I'm going to make $29.50. My max loss is $169. So for me to reach max loss, the stock would have to drop to $49.50 for me to realize that max loss. So that's how you would sell a put credit spread. Again, the key to this is you want to make sure that your short leg, in this case the -1, is the leg closest to the stock. The leg that you're buying will be further away from the stock, and that makes it be a credit because the leg closest to the stock is going to be more expensive than the leg furthest away, so the net difference will be a credit. Another way you can do this, instead of right-clicking and going to vertical, sell vertical, you can also just click on the bid and then hold down the control key and click on the other strike price ask. So I want to do the 49.50, and you can see it adds both of the legs that way as well. Let me do that again so that you can see it in the screen. So if I click 51.50, it will populate the first leg in the order entry screen, and then when I hold down Control and click the 49.50, and now when I click the 49.50, I want to make sure I click the ask, because again, one leg you're selling and one leg you're buying. So this is the leg that we're buying, so I click ask, and that will add the second leg. So that's just another way you can do it. If you want to do it manually, probably the easier method is the method I showed to begin with. And the same thing works on the call side. Again, if you are bearish on a stock and normally you would buy a put, in this case we want to sell a call credit spread, again picking strike prices that we think the stock will not go. So if I think that Micron will not go to the 55 level, then I could right click on 55, hit sell, vertical, and again it's going to default the closest strike price, so I can go in and adjust the other strike price to be something higher if I want to do, let's say, 57, and the credit is roughly the same as the credit we saw on the put side. And then you would hit confirm, send, and you're going to see the same information. Sorry, I did 10 contracts. Let's do this one contract. So one contract, you're going to get a credit of 29.50, and again your max loss is 169 if the stock does go up to the 57 strike price. And real quickly, I'll show you how to do this in the mobile app as well. Here we are in the mobile app. Once you bring up a quote, you can go to the options tab, and you can see in the center here it says spread. Right now it's set to single. If you go and change that to say vertical, now you will see that the strike prices down the center, it has two strike prices listed. And again, it just defaults the strike prices to the two closest strike prices together. We can change that after the fact, kind of like how we did in the desktop app. So just scroll down. I normally just scroll down to where the at the money strikes are, and then I will adjust them later once I go into the order. In this case, you want to click on the bid since we're selling. So if I click on the bid at 0.22, it's going to bring it up as a sell, which is what we want, again, because we're selling a spread. If I had clicked the ask, it would have brought this up as a buy. And you can see up top, this is where it lists the legs. It lists the short leg, and it lists the long leg. I want to adjust these to the strike prices we had earlier for the call. I believe I had the 55 and the 57. So I'll go adjust the long leg just by clicking on the leg, and it's going to bring me up a little scroll wheel while I can adjust the expiration week, and I also can adjust the strike price. So I'm going to adjust this one out to 57, hit done, and then I'm going to go adjust my short leg to 55, hit done. Also, I want to change my contract size because I don't want to sell 10. I only want to sell 1. So if you hit the plus sign, changes it to 1. And you can see, just like the desktop app, it's going to show the total credit received. If I hit confirm, it's going to show me how much buying power it's going to take, which equates to my max loss. It shows you here your max loss of 169 and the total credit received. And then you would hit paper trade to submit the order. So that's it. I know that's kind of high level. If you have any questions specifically about strike selection or expiration weeks and things of that nature, I didn't want to make this video too long by going into too much detail. So like I said, I'll include a link to another video I made about spreads, and then if you have any other questions about this, just feel free to let me know. Thanks.